Hello, my name is Tony Monisse. We'll be starting now. Look, I'd just like to welcome everyone today to our webinar. The topic today is about navigating your business in this current economic climate and how, as a business, we can have a more agile business. I think it'd be fair to say that, for many businesses, it's been a pretty stressful period over the last 6 to 8 weeks. And so I think there's a bit more confidence out there. So today is a bit more how we can navigate through this time with more confidence and set our business up for success. So what I'd like to cover today, and I'll be covering it with my fellow director, Chris Smith, just a brief introduction about us. We'll also talk about what is the game plan to navigate through this time. We'll talk about the importance of having a stable platform for your business, but still entertaining that dynamic capability to be agile in the current environment. We'll explore some strategies around growing your business, increasing profit, and improving cash flow. Chris Smith will cover some of the government measures and some of the more recent announcements, even as recent as the last 2 days, and the impact that may have on your business. We'll talk about how to execute and be agile in execution. I think that's also a very critical part of being an agile business. And then we'll open it up to some questions. So just a little bit about myself. I'm a director of BrentnallsWA. I work in the business advisory space. I work with a number of businesses and have worked with a number of businesses in the civil and construction space. Today, I want to share some of my insights and some of my learnings of actively working in that space. Some case studies around that. So we'll go through that today. Chris Smith is a director in a tax director in our business. Chris has been actively monitoring a number of the announcements that have been coming out from the government, particularly most recently with the JobKeeper, and also some of the other opportunities that exist for businesses around some of the government announcements. So we'll get started. I think if you look at where businesses are at, there's three horizons that I see it and or draw on. I think for a period of time, it was really about survival for a number of businesses. There was obviously that really initial uncertainty. It was just about surviving. I mean, it was the eye of the storm. We're trying to get through this sort of period. I think it'd be fair to say that anxiety has sort of settled down now. And very much at the moment, it's around, well, how do we pivot or adapt to this current environment and set ourselves up to thrive, to grow our businesses? And what does that mean, I think, across, our customers, our employees, and also our supply chain? So I think as we talk today, we'll be talking about all three facets and, really how do we set ourselves up for success? If I can use an analogy, an example, what, as I mentioned at the beginning, is how do we have, a stable, an agile business? And really this, a study in the Harvard Business Review talked about how can you have a stable platform yet dynamic capability. A really good example of that is the iPhone. Obviously, that stable platform, but also that ability to be quite versatile in terms of what it can do and the functionality of it. And how do we have that sort of attributes or characteristics in our own business? This is a framework that we work with our clients, and I'm not going to talk about everything in that framework today, and I've just really highlighted in yellow the areas I want to cover, in terms of the business. And if I just focus on the pillars for the moment, there's 4 pillars that we focus on with our clients, and I think is relevant today. The first pillar is around our commitment to the business, the energy that we need to get through this time and to maintain that agility in our business. The second pillar I'll talk about is the financial control. So if I look at those first two pillars are very much around that stable platform. The next pillar is around our ability to plan and to have a plan. And the last pillar is our ability to execute. And those last two pillars are very much around that dynamic capability. So it's important that we maintain balance across all those four pillars if we're going to successfully navigate and be an agile business in this time. So let me talk about the first two pillars around a stable platform. So the first pillar is that commitment. I'll just leave everyone to read that quote. So hopefully we're all leaders. You know, we're not complaining, we're not blaming, we're not hoping, but we're actually taking action and adjusting our sails to navigate this time. So how do you stay committed? You know, my experience is that working with a number of business owners and even working with a number of business owners over this last 6 weeks, you know, I think the first thing is, you know, you've got to put that oxygen mask on yourself. You know, I think, you know, to last a distance, you know, we just got to find time to be in a good space ourselves. You know, if we burn out, then we're really not going to be much good to family, our friends, nor our business. And really for me, that's more about being really clear on your vision, really clear on your purpose and your goals. You know, how do you balance that mental side? You know, there's been a lot of 24-hour news cycle out there. You know, how do we manage that? I mean, you know, fortunately that's starting to settle down a bit. You know, how do we balance the emotional? You know, how do we still get that human connection? And I think also just looking after our physical health. But, you know, for me, if I can draw on an example for myself, you know, even, you know, in terms of my personal purpose and, you know, why I get out of bed, I guess is to help business. I think that's the thing that really engages me. And, you know, even in some of those sort of challenging times and even at this moment, you know, for me, it's about how I stay true to my purpose, which is really about helping other businesses. And that's where I get, you know, my greatest satisfaction and joy of turning up for work. So, you know, what is that for you? How are you going to maintain your energy? How are you going to get through this next few months as you navigate your business out and build a more sustainable, agile, dynamic business? The second foundation, you know, part of a stable platform I want to talk about is control. And there's a number of facets to that. I think the most important thing, I've just seen examples just recently, and it's just so important that businesses have, I guess, what I refer to as accurate, relevant, and timely financial information. You know, I just see so many businesses that just make poor decisions because they just don't have the right information to make those decisions. And, you know, certainly in the civil space, the civil construction space, I mean, obviously, you know, we want those accurate, timely financial statements. I think the second thing that is just most important, and I just see often lacking in a lot of in the construction space is, you know, accurate job gross profit reports. You know, that's both on a month to date, year to date, and project to date, and also measuring against budget. And it's also important with those job gross profit reports that they actually reconcile back to the financial statements. So many times I see a disconnect with the gross profit reports that a business is looking at and what is appearing in their financial statements. So I just can't emphasize that enough. The other thing is, and again, an area I often see lacking in terms of the ability to make decisions is an accurate work in progress calculations. You know, often, you know, businesses are relying on financial results, but the work in progress calculations are not accurate. So I can't underestimate the importance of, you know, having accurate financial information and work in progress calculations to do that. Other important things to measure in the civil space is around labour utilisation. You know, one of my favourite measures, and I think a really good indicator of the productivity of labour is gross profit margin per dollar of direct labour, and monitoring that as a measure in the business. Plant utilisation, you know, are we getting the utilisation of plant? Do we have, is there an over-reliance on external hire? Just need to be conscious of that. And lastly, cash flow analysis. And that's around looking at our earnings before interest, tax and depreciation, looking at our working capital, our CapEx and our funding, and we'll talk more about that in a moment. So, you know, we've talked about accurate, relevant and timely financial information. It's also important in this space, in the civil space, to understand the drivers of both sales, profit and cash flow, and we'll talk more about that in a moment. The other area I see a lot is that often in a business we have, you know, areas, sections of our business where we're losing money, it's draining money, and then we have sections of our business where we're generating cash flow. And it's really important as a business owner and as a leader and a manager in your business to understand where that's happening. So segmentation is really important. You know, it's really important if I look at this model here, you know, to understand what those key segments are in the business. You know, and those segments could be by customer, could be by product, you know, or the type of service. It could be by geography. It's really important to understand those segments. You know, a client we're working with at the moment, you know, we're segmenting their gross margins and their and the cash flow by, you know, whether it's a tier 1 customer, tier 2, tier 3 type customer. So it better helps us understand where they're making margin, where they need to revisit the way they are tendering for their work so they get better outcomes. And that's particularly with their tier 3 customers. But not only is it important to understand the sales, we also need to understand the profitability and the cash flow impact. You know, for example, with the tier 1 customers and some of the, you know, the bigger customers, particularly with the contractors now, we're getting more favorable terms on payment. And that's a real positive, but maybe on some of those tier 2, tier 3 type customers, our payment terms are less favorable. So we need to be across that. The last thing we need to do to build that stable platform is we need to forecast. We need to have, you know, be looking out, I guess, at least 3 months in the current environment. And, you know, if we can look out further, great, but we should be looking out at least 3 months. And I'll run through an example of that and just the impact that can have and just some of the impacts we've seen with some of the businesses that we've been working with around that space. I'm not going to go through all these points. They will come out on the slide, but we talked about, you know, stress testing that, you know, around the growth and the sales is how do we, you know, we need to stress test the business. And I'll show you an example of that in a moment, you know, a real live example for a client in the construction space. You know, just stress testing, you know, various scenarios. What does that mean? We need to keep updating our sales pipeline. From a profit perspective, you know, we should be reviewing our expenditure by supplier. We should be looking at the impact of revenue on fixed and variable costs. We need to really understand the behavior of fixed and variable costs in our business as revenue comes down. What does that mean? You know, are we looking at our labour requirements and the impact of that? And Chris will talk more about government subsidies. And from a cash flow perspective, we will talk about working capital. You know, again, Chris will touch on some of the finance and government assistance. And yeah, I think also, again, we'll talk about what it means to access funds and have available funds to navigate through this time. But can I say, I think one of the most important things, and we're seeing it with some examples with clients that we're working with at the moment, is not to confuse cash flow with profitability. Look, obviously at the moment, there's a number of sources of liquidity or cash flow that businesses can lean on, you know, be it the government, the banks, various instrumentalities, where businesses are leaning on that to access liquidity. But just because we access liquidity doesn't mean that we cannot, we still must be profitable. Otherwise, we're going to be in a position some 3 or 6 months down the track, we're going to have to pay for, repay those losses we've incurred. So it's really important that businesses are on top of their numbers, they understand their profitability, and they're not confusing that with their ability to access these various facilities to navigate through this next 3 to 6 months. So what I'm going to do now is I'd like to just go to an example, and I will pull up a client which we've done some adjustments to just to protect the innocent. And look, across the top, and I'm not going to go through this in great detail, but I just want to, I guess, highlight the importance of sensitivity analysis and why it's so important that businesses look forward and not only understand profitability, but understand their cash flow. And what we've got up here is some key measures, but I want you to just focus on my cash flow line. And you can see here, you know, at the end of March, this business had an overdraft of 63,000. And at this stage, we're projecting 39,000 in April in the bank, 10,000 in May, and a substantial 393,000 improvement. What we did with this client is we stress tested this outcome. And without going through all the detail, what we can see is for the last 3 months, this business did from January to March, this is the revenue numbers that it did. In the last 2 months, it's been averaging between 550, 600. The client put together a sales pipeline. That pipeline is showing revenue of 700, a jump in May of 1.1 million, and then back to 883,000. And look, to the credit of this client, they have been pretty active with their pipeline. What we can see down here is for the last 2 months, in terms of contribution margin, this business has been averaging around 15%, dropped to 11%. But for the purpose of our forecast, we've assumed 13% as the gross margin. So it just gives us some idea of the profitability of this business. We've also got the overheads of this business, which you can see here. They're about 79,000, and for the purposes of the exercise, we've assumed about 85,000 a month. So what does that mean? It means that we've got an EBITDA result, an earnings before interest, tax, and depreciation result of a small profit of 8,061 and 30. You can also see in here that we've included some of the government incentives that they're going to get in terms of, you know, the cash flow boost, and in this particular case, the cash flow boost incentive. It's important to look at these, you know, from my perspective, it's important to look at these incentives before, you know, you still want to look at the true trading result, because at some stage these incentives are going to run out and we're not going to have, the business is not going to have those to lean on. So we really still need to focus on the result before the government incentives. I see them in a sense as a bonus or just something to help us get through, but not something we need to rely on because it will run out. I'll just show you one last thing in this business model is we do a working capital analysis here, and I'm only going to focus on the debtors in this case, but you can see, you know, in this case, the business, it had debtors outstanding at the end of January of 693,700. Their debtors rose to 1.1 million. Then they rose to 1.11. Very close, very similar in March. So there was a pretty substantial increase in debtors. And what that means is that their working capital increased substantially. And here we're forecasting the debtors out over the next 3 months. And you can see that we're assuming days debtors are going to be around 50 days. And look, that's a big assumption at the moment. And probably the thing that's going to probably impact most businesses is the days debtors collection. Again, I won't go through all the detail here, but you know, we've got a cash flow analysis, cash flow statement down here. But what that's showing is that this business, after allowing for that profit that we've got up here, the 861 and the 30, and allowing for the working capital movements, will show a closing cash balance of 39,000, 10,000, and 393,000. Now, one of the things that we did with this client is we tested the sensitivity of sales. So, for example, if I was to assume here that we weren't going to achieve those sale pipeline and sales were going to decrease by 20%, we're actually going to see a positive, you know, much to everyone's surprise, because of the decrease in debtors sales, it doesn't really affect our profitability too much, just because of the level of direct variable costs in this business. And what we do see is an increase in cash flow, largely because the working capital in this business drops from 919,000 to 560. So a reduction in sales is not going to significantly affect this business, especially with the government subsidies. So I might just change that back to no decrease in sales. But what's really interesting about this business is that if we change the debtors and if we look at the impact here, so let's say our customers take another 10 days to pay us and we push that out to say 60 days. What is substantial here is our closing cash goes from minus 63 to minus 400 to minus 654 with that increase in sales that we're expecting in May. I mean, it's substantial. And look, we had that discussion with the client. Now, how are we going to navigate this? And these are the sort of discussions that need to be had with, by looking at the sensitivity analysis. We're working with another client, and I think the thing that is most likely to affect businesses over the next 3 to 6 months is the collection of debtors. So just modeling that sensitivity and looking at different scenario analysis and looking at how we're going to manage that cash flow is just so important. So look, I'll leave that example there, but it's really just to show you the importance of looking at different scenario analysis and modeling some of the key variables in the business. And I think, for me, a lot of it's around working capital analysis, and it's also around cash flow. All right, we'll go back to the presentation. So if you think of where we are at the moment, we've talked about how do we have a stable platform. We've talked about commitment. We've talked about accurate, relevant, timely financial information to make decisions. We've talked about forecasting and looking out three months at least and doing scenario analysis. Now I want to talk about that dynamic capability. And that dynamic capability is around, our ability to plan. So let's explore that a little bit more. Well quoted, so Winston Churchill. What's important is a business needs a plan. And that 3-month forecast that we just talked about is part of that, that plan. We need to know where we are now, where we need to get to, and how we're going to get there. And then we can put in place the strategies to get there. And what does that agile business model look like? So I want to cover 3 areas today as part of that. The first is around growth. What does it mean in terms of our marketing and our sales process? Around profit, what does it mean in terms of our people and our process? Cash flow, we'll look at working capital and CapEx. And what does it mean in terms of being agile around our ability to access debt and equity sources? So let's talk about growth. Well, actually, just before I get there, look, probably one of the most important things that I think a business needs to be clear on, and as we come out of this period, is who is our target customer? Where we want to play? Who do we want to deal with? Is it tier 1, tier 2, tier 3? Is it in regional areas? Is it in the metro? Is it government? Is it private? We really need to be very clear on who our target customer is. And what's our sustainable competitive advantage? Is it going to be around our ability to solve, provide solutions? Is it going to be around our contract management? What are those key focus areas that we need to be excelling if we're going to win in this space, both in terms of maintaining that customer relationship and also being profitable? I guess once we're clear on that, then I guess if I describe it in terms of, this is the iceberg, is, that's the bit above the water is, who our target customer is, where we're going to play, how we're going to win. But the key thing is, what are the unique key capabilities we need to win? What are the processes we need? What are the resources we need to access? Who are our key alliance partners if we're going to win in that space? So I really encourage businesses as we come out of this period to refocus again. I had a discussion with a business today about, look, there's still this uncertainty, but I think we just need to get back on track with our strategy and really sort of define where we're going to play and how we're going to win and what capabilities we need. So let's look at those 3 areas we talked about. First, let's talk about sales and what do we need to do to be agile around sales? I think, as we sit here today, there's going to be, there's dry creek beds and there's flowing rivers. And there's a lot of people sitting in dry creek beds and there's other people just looking for those flowing rivers. So let's talk about the flowing rivers today. This is a framework that we use when we work with clients, especially in the strategy space. But if I can explain the framework, and then we can just talk about that a little bit more, and what does it mean, in a civil construction space. So if you think about it, we work in existing market segments with our existing products and services. So that's our existing business. But also there's new market segments that we can get into that maybe we're not in at the moment. And also equally, there might be some new products or services that we can provide that previously we haven't provided. And lastly, I guess if we look at there's possibly opportunities around, moving into new market segments with new products and services. I have highlighted in red, that is probably the highest risk sort of area to move into. But let's talk about the other three boxes today. If I look at existing market segments and existing products and services, that's really about relationships. It's about our contact plan. I can't encourage you enough to really look at your CRM, your contact plans, with your key people across all parts of your business. It can be anyone from your estimators through to your project managers, through to senior management, but put in place that contact plan. Make sure there's contact happening at all levels of the organization with your customers. Ask them about their challenges. Where can they be helped? Be flexible, nurture that relationship. Look for opportunities to add value. Focus on those customers where you believe there's high growth and high profit potential. Put your energy into those type of customers. And also think about, where are the opportunities around recurring income, recurring maintenance type work versus project work. How can we build that right mix of recurring work and project work, especially if we want to be an agile business? Because I think we want that right balance of that recurring work to underpin our overhead cost structure versus taking advantage of project work as it arises. So that's our existing customers, existing products and services. Then we need to look at, where are the opportunities with our, new market segments? Fortunately in the civil construction space, it's been able to navigate through this period of time because its services are deemed essential. There's been recent announcements from the state government, also from mining and some of the bigger mining players. That there's been discussion about infrastructure projects, shovel-ready type projects. It's important that we have the right intelligence so we're keeping on track, with those opportunities as they come up. And look for areas where there's skill shortages at the moment, where there is an opportunity to provide your services. Look at the opportunities around, can we look for more equipment intensive provision of services, less reliance on labour? Can we retool our equipment in a way where there's less reliance on labour, or source new equipment where that reliance on labour is less? Look for areas where there's been supply chain disruption. Can we solve that, our customers' problem by meeting some of the disruption that's been happening in their supply chain? And look for the opportunities that are happening in the regions. If I look down here in terms of new products and services, I think, obviously a lot of businesses have had to go digital online. Does that provide new opportunities? Can we work remotely, especially with some of our consulting services where we can do feasibility or consulting type work as part of a pre-qualifier with clients and customers that we need to work with? So where are the opportunities around that? I think the other thing it's really important is to keep up our marketing plan. What is our marketing plan? We need to look at multiple channels, whether you're active on LinkedIn, working those relationships, working those networks, looking for organizations where we can get in front of people. So I think, having that marketing plan is important. I guess the last thing around growth and sales is defining your sales process. Where are the opportunities to be, online, versus face-to-face, in terms of our process. There have been restrictions on getting in front of people, but, a bit like today with Zoom, can we use Zoom? We've seen with a number of clients, they've started embracing Zoom in terms of getting in front of their customers that was previously difficult. I really encourage that, and as a way to interact with customers. Maybe that's an opportunity to help the sales process. So where are we? We're talking about that dynamic capability. We've talked about sales. Let's talk about profitability. I think, you know, my experience and my observation, you know, the last month or 2 months is really understanding your value chain. You know, where are the opportunities to increase value and reduce costs? You know, where are there capacity, where is capacity available and where are there constraints? And it's really important that businesses look across their value chain, and we'll talk more about this in a moment, but across their marketing and sales activity, across their production and delivery, and finally looking at, you know, where are the opportunities around finance and support. And the best way to look at the value chain is in terms of what I would refer to as people and process. So where are the opportunities across that value chain to where we can improve the way we engage with our people and improve the way in which we focus on our process? So let's talk about people. You know, I think the most important, and, you know, I think what defines an agile business is your leadership team. You know, it's really critical to look at your leadership team. You know, do you have an agile, resilient leadership team? You know, is your organization structure? I think one of the things that's come out of this last couple of months is, you know, the layers of management. Do we need all those layers of management? Can we simplify our management structure? You know, looking at workforce planning, you know, what's the mix of full-time equivalent versus subcontractors? How do we build our business with the ability to scale up and down? You know, looking at work hours, you know, again, I think that's been pretty well documented, you know, looking at the contractors with the casuals in our business. How do we protect critical roles in our business? How do we isolate work teams, split shifts? You know, some of the measures that are required around FIFO. I think important for businesses at the moment to look at their work from home policies. I expect we'll see some sort of movement or shift in there. OH&S policies, how they've been revised. As I mentioned earlier, you know, do we need to take a more equipment focus and less labor intensive look at our business? You know, how can we, you know, maybe scale our business in a way that we rely less on labor? And I think just tracking productivity in amongst there, you know, what does that look like? So that's around people, you know, in terms of our value chain. Where are the opportunities, again, you know, as I said, to reduce costs, increase value in the way we manage our people? So let's look at process. You know, critical to look at, you know, I think this last couple of months has provided the opportunity for many businesses to look at their suppliers, you know, seek tenders, negotiate, look at their non-essential expenditure. You know, how do we create a leaner business that is more agile, that can still respond to opportunity? You know, I think we've talked, again, well documented, supply chain disruptions. And I guess what we're seeing increasingly with a number of our clients is transport restrictions. You know, do we need to seek alternative sources that maybe are onshore versus overseas? You know, what new innovation or technologies are available? You know, is there opportunities to improve the way we design? Is there opportunities around fabrication off-site versus on-site? I think also important, I mean, just absolutely critical at the moment, and just some of the examples I'm seeing is the project management skills. You know, how are we managing variations? You know, what's our claim recovery processes like? Are we onto it? Our ability to renegotiate price and scope, especially where, you know, especially with some of the FIFO stuff that's happening out there at the moment. Are we renegotiating? Are we taking the hit? Are we going back to our customers? And I think also in, you know, in amongst that, with how do we manage our reputation amongst that, most important. You know, I think one of the things that's been exciting, and, you know, even for our business, is the ability, this cloud-based sort of infrastructure, which allows us to engage with our customers and our staff in a way that, you know, is now an accepted norm. So, you know, what does that mean for your business? Can you have a much more flexible workforce, you know, with this new infrastructure that's available? You know, again, it's been pretty well documented about premises and the code of conduct, and I'm not going to specifically talk about that today, but, you know, what sort of level of premises do we need? Can we organize ourselves differently, you know, in terms of our office, in terms of the amount of yard space we need? And lastly, I think travel. You know, I think what this period has shown us is that we don't need to travel everywhere. Can we review the way we conduct our business from a process perspective in terms of travel? You know, are there better ways? You know, maybe instead of traveling every month, we only need to travel every quarter. Maybe instead of traveling every quarter, we only need to travel annually. So, you know, are there different ways that we can engage with our staff and our customers in a way that can contribute to our bottom line, still keep us agile, but, you know, provide that stable platform? So we've talked about sales. How do we be agile around sales, around our opportunity matrix, around our sales process? We've talked about profit. We've talked about our value chain. We've talked about, you know, how we can get better at managing our people and process to improve profit. The last bit I'm going to talk about is cash flow. And then I'm going to hand over to Chris Smith to talk about some of the you know, how we can be agile around tax. So let's talk about cash flow. You know, often businesses go, you know, I've made this profit, but where is it? You know, and that's that cash at the bottom of that funnel. And often where our money goes, it goes into working capital, which we talked about briefly in that example, in that Excel example I provided. You know, it gets consumed in CapEx. You know, we have debt obligations, we have equity obligations, and then we're going to pay some tax. And then what's left over is that cash. So what's really important in a business is we need to understand all those levers. And it just surprises me how many businesses don't analyze cash flow. You know, most of the focus on the profit and loss, lesser focus on the balance sheet, and very little focus on the analysis of cash flow. So let's talk about cash flow. You know, we buy stock, you know, consumables, parts, materials into our business. You know, we might be paying our creditors on 30 days because they're quite demanding. You know, typically, you know, from when those consumables, those materials arrive, we might invoice our work in progress after 45 days. And then maybe some 50 days later, we might collect our debtors. So what that means is that we've, you know, between our work in progress and our debtors, we've got 95 days tied up. And we typically paid our creditors in 30 days. So what it means is that we've got close to 65 days of sales tied up in our work in progress and our debtors combined. And often as a, you know, especially in the contracting business, we're paying our wages, you know, weekly. So there's a substantial amount that is tied up in work in progress and debtors typically in a contracting business. So it's really important that we're on top of the management of our work in progress and we're on top of the management of our debtors. And we negotiate and get acceptable payment terms with our creditors. And if we can work on all those levers, we can substantially improve cash flow. And this particular client example that we just showed, now we've been actively working on some of those measures, and we'll talk about that in this next slide. So what can we do around debtors? You know, we need to be active. We need to monitor daily, weekly. You know, we should have dashboards around daily, weekly collections. You know, if senior management, the CEO needs to get involved in debtor collections, so be it, get involved. You know, we just can't, you know, if we're struggling to get collections, everyone's got to get involved in this time. It's not just something to leave with the debtors person. You know, we need all people across the organization to get involved in debtors. You know, if there's disputes, we just need to deal with it. You know, whether it goes to arbitration, there's also various government legislation that's come out, I've seen recently, where we can, especially in smaller matters, we can resolve those disputes within 90 days. Enter into payment plans with customers if they're struggling, but we just need to keep the cash flow moving. That's how we share that pain and we keep that cash flow moving in our business. And maybe there's the opportunity for discount for early payment. Around WIP, you know, look at this particular contracting customer has gone back to its customers and moved from 30-day invoicing to 14-day invoicing. Substantial improvement in working capital and cash flow just by moving from 30-day invoicing to 14-day invoicing. Now look at those sorts of opportunities. Look at where there's an opportunity for mobilization fees. Look at your stores. You know, can we run down stores? Can we be more just in time in the management of our stores and our materials? With creditors, renegotiate payment terms, prioritize those critical payments, those critical suppliers we need to. Look at the ATO, and Chris will talk more about Office of State Revenue, utilities, insurance. Look, I think the most important thing, and look, that opportunity has just been missed, but I can't emphasize it enough, is pay your super. You've got to get a tax deduction for your super. If it's going to push off any creditor, don't push off your super. Now, you're coming up to the 30th of June. We've just passed the March period, but pay your super. I can't, you know, we just had an experience with one business, you know, despite urging, overlook paying their super. They've just missed a tax deduction. It's like just handing money back to the government. Pay your super. Can't emphasise it enough. Look at your CapEx. So we talked about working capital. Look at your CapEx. You know, can you divest surplus plant? Can you return any plant hire? You know, look at the level of plant hire in your business. Are you getting utilisation? Sale and leaseback opportunities. We've seen some sale and leaseback if you need to raise cash. And even with second-hand equipment, we've seen some financiers being able to do sale and leaseback and refinance if required, particularly with your HP repayments. Debt. You know, defer bank loans and HPs. If you need that time, look at that. Renegotiate rates. Look at debtor finance. I appreciate in the contracting space that might be difficult with some customers, but there are some debtor finance opportunities in the contracting space. The government's talked about their SME guarantee scheme, which is $250,000. Go back to your bank, speak to your bank about that, seek that. There are also some third tier funding. I've seen some examples of that where, you know, the rates are higher, but the opportunities are there. I think the last thing is look at your use of bank guarantees versus retentions. You know, I think in some cases, you know, maybe going the retention path may be more optimal than putting up bank guarantees, particularly in terms of availability. Nearly there. Equity. You know, look at, especially with owner-operator businesses, look at your drawings, look at the way you're taking remuneration. You know, should you be taking it as dividends, salary, drawings? There's a 20,000 access to super for employees in certain circumstances. Look at your own personal loan situation, credit cards, and if you are going to put money, put it in terms of personal contributions. So look, that's me for now. I'm going to hand over to Chris Smith. Chris is as I mentioned, is been actively monitoring all the announcements coming out from the government. Even some announcements have come out in the last 2 days. So I'll hand over to Chris.
Sorry, I've lost my video. I'll just get that up. Okay, look, as Tony mentioned, I'm going to focus on running through the federal and state measures, but with a prime focus on small to medium businesses. So I'm not going to be talking about some of the measures that have been put out there for individuals, and really a focus on what's out there for the business and some of the things to be aware of. These really are unprecedented in nature in terms of what the government has put out there to stimulate business and keep the economy either in a hibernation mode, as they've talked about, but really help us get back out the other side when this all sort of dies down a bit. One thing to be aware of, I would also then expect some unprecedented action from the ATO in terms of compliance with the rules. We've already seen a number of correspondence and communication regarding schemes that have been attempted to be entered to access some of those measures. And it is really important just to be aware that you are following the rules. I encourage you to document in terms of your eligibility, making sure that you've dotted the I's and crossed the T's, because essentially you're self-assessing for a lot of these measures, and the ATO has the ability to go back 5 years in terms of testing your eligibility. And if you were to have to pay these amounts back and with interest, it would be crippling for most businesses. I'm going to spend most of my time focusing on the JobKeeper payment. The JobKeeper payment has been obviously the most generous of all the stimulus measures. It's also been the one that has had the most legislation rushed in, and also the most rule changes that have been changing. And I'll refer to some of that very shortly. In terms of the rule changes, as recently as Monday, they clarified some of the points with the eligibility. So we'll talk about those in a moment. Really high levelly, sorry, don't know what happened there. So from a high level overview of what this relates to, $1,500 per fortnight per employee. This applies from the 30th of March 2020, and the first of those payments from the ATO are expected to start coming out in the next week or so. When you work this out, if you're eligible for this JobKeeper payment right from the start, it equates to $19,500 per employee. So as it's very clear from that figure, it's a very generous amount and can add up. And we'll talk about some of the eligibility, but as long as you're a business with less than 1 billion turnover and you've got that 30% reduction in turnover, this will apply to a large number of businesses. You must pay this amount in full to your employees. I have spoken to a few businesses and they've either read in the media or heard on the radio that it's a windfall to the business if the employee earns less than $1,500. You do need to pay that full $1,500 to the employee. And this was also a point that was in contention for a little period of time, but all eligible employees must be included for your business to be eligible. In the event that you have pick or choose your employees or have one eligible employee you haven't paid this $1,500 to and included in the lodgement process, you're actually not eligible as a business. So it is a really important point to check, and we'll talk through the eligibility in a moment. But a lot of focus has gone into businesses checking the turnover eligibility without then testing all the eligibility for all their employees. So please don't overlook that. In terms of the registration date for the JobKeeper, it's recently been extended to 31 May. And there is a deadline in 2 days' time. In terms of this minimum $1,500 per fortnight, you must make your payment to those employees for the April wages by the 8th of May. So if all your employees earn over $1,500 a fortnight, you don't actually need to do anything. This is only really for the employees who are less than that amount. To be an eligible employer, and look, we sort of talked about it very quickly before, but the basic test is the Gst turnover decrease by 30% or more. In terms of that 30% or more, and look, we will touch on it, some of the tests you can do. What they're looking for is you applying it, well, for eligibility right from the start. If your turnover has decreased in the month of March compared to the prior year's March, you're eligible for the full 6 months. If your turnover for April was forecast or has reduced by 30% compared to the same period last year, you're eligible from the start. And if you are forecasting your June quarter turnover to have reduced by 30%, you're also eligible right from the start. If, for example, you're not eligible until the month of May, then it will only apply for the 5 months. And similarly, for the quarter of September, if you're eligible for the 30% reduction there based on your forecast, you'll be eligible from the start of July. You must elect to participate, and so that does mean, one, you need to do your registrations on the business portal, and you also need to make sure that you're making this payment to your staff. If you don't make the payment to the staff, you're not eligible. And we are seeing, not for our clients, but in the market, there are some businesses not accessing or not paying their staff and not going to access this JobKeeper payment. I mentioned before your turnover. The rules are complex, and we don't have enough time today to run through all the complexities there. What I do really encourage you to do is seek advice, because you are self-assessing, you are notifying the ATO of this reduction, and if in the event that you don't actually make this amount, you could be having to pay it all back with interest and penalties. So look, I really do encourage you to review with an advisor. We've got an example of a business who actually thinks they're doing fine, that they're not expecting a reduction at all, but based on their cash turnover, so it was when they received the cash, they had a great collection of cash in March last year and didn't collect much cash in the current March period. And although it's really a timing issue and links back to some of the cash flow things Tony was just talking about, they found themselves eligible, and that was only through us really digging through their financials and having a closer look. So I do highly recommend getting some advice. The concept of turnover, and this is where some of the complexity comes around, is it's a GST turnover, and it's covered in the legislation. And this document, LCR, which is a Law Companion Ruling 2020/1, this is a document that came out on Monday. It's a 22-page document that basically talks about the basic test, which is this 30% reduction. Some businesses can rely on cash. Most businesses can rely on accrual. And where the complexity comes around is what's the actual definition of when supply is made. And yeah, anytime you're carrying WIP, or if there's a difference in timing of your invoicing versus doing the work, there can be a real complexity around this. So I do encourage you to get some advice if you are not in a clear-cut category. Obviously, businesses like pubs and so forth, which aren't able to trade, will easily satisfy the test. The government's also released some alternative tests. They're quite complex. We're expecting some more rules to come out, but essentially they apply to businesses where they don't satisfy the basic test. And typically they've been outlined to include businesses that have commenced in the last 12 months, businesses that have acquired other businesses, entities that have restructured, perhaps a turnover substantially increased. So again, don't have the time today to go through all the detail, but there are a number of other tests. So look, you may have failed the basic test, but there are some other tests that might be applicable to you, and we do encourage you to have a closer look into that. In terms of your eligible employee, they need to be full-time, part-time or casual for more than a 12-month period. You can also apply it to one owner who does not receive a salary, and they're considered an eligible business participant. And you can only receive the JobKeeper payment for one employer. The employees must complete an employee nomination notice. So the employer basically sends the notice to the employee, they complete and return it in terms of satisfying the eligibility. But the starting point is the employer who must provide that notice. And we just link back to where we mentioned before, it's a one in and all in. And this includes any employees that have been stood down. Now, look, just some other points I wanted to flag with the JobKeeper. To be eligible from the start, as we talked about, was March, April, or April to June quarter. You can be eligible at a later date, so even if you don't satisfy it now, don't completely rule it out. It's worth reassessing this on a month-to-month. You need to continue to pay super as normal. So if your employees already earn $1,500 per fortnight, they must continue to be paid super on top of that. For any employees who you have now topped up to $1,500 due to the JobKeeper, you don't pay super on the additional top-up. Sorry, my keyboard's going crazy here. And look, your pay cycles don't need to match the ATO's fortnights. However, if you are paying on a monthly basis, you need to pay the equivalent of $1,500 per fortnight during that month period. And the reason for the downturn of your business does not need to be COVID-19 related. One of the common questions we're getting is, if your turnover doesn't eventuate, what does this mean for your eligibility? Well, the way that your predicted turnover works is if you can document it, it is based on your predicted turnover. If your turnover doesn't drop the required 30%, you do run an increased risk of an ATO review. So just be careful there. And as I mentioned before, document. And the bank hotlines are providing support in terms of the cash flow we talked about before. The cash flow boost. Now, this was one of the original stimulus measures announced and got a lot of media to start with, and it's been put into the shadows due to JobKeeper. As a result of that, I'm going to go really quickly through here, but I do encourage you to see me if you've got any questions. The eligible businesses, so group turnover needs to be less than 50 million. It provides a minimum of 20,000 and up to a maximum of 100,000 cash flow boost to the business. And tranche one of this amount is up to 50K by July. It is related to the withholding on wages during that period. And I'll talk through a very high-level example in a moment. And then tranche two will be paid in equal instalments between July and October. You must have payments to staff. It seems obvious, but they do need to be payments to staff. Whereas the JobKeeper has got some of those other exemptions for business participants. This is linked purely to salary and wages. And you did need an ABN on the 12th of March to be actively considered in business. How to receive? You've got to lodge your March BAS. So because it's connected to withholding, lodge your BAS. We've already started seeing the amounts come through. If you're a monthly lodger, the payment will be 300%, so 3 times the amount of your withholding, up to an amount of 50K. And if you are lodging quarterly for withholding, it'll be 100% of your withholding for March. And then, as we mentioned, there'll be 4 equal portions. So as an example, if you're a monthly withholder of 15K per month, your March BAS, you'll get a 45K credit. April BAS, you'll receive a 5K credit, taking you up to the maximum of 50. And then in your June through September months, you'll receive 12.5 in each of those. Now, there's lots of anti-avoidance activity with the ATO in this space. So again, important to dot the I's and cross the T's. I'm going to touch now on other federal and state measures. And again, very quickly, but it's important to be aware of some of those have really fallen into the shadows because of JobKeeper. So I will run through it quickly, but if you do have further questions, please come and see me or give me a call or see your advisor. And we've also got some blog articles that refer to these measures. So the instant asset write-off. So if you have a group turnover of less than 500 million and acquire assets up to 150,000 that are installed ready for use before 30 June 2020, you get a full tax deduction. If you are a bigger business than that, or you're acquiring assets up to 30 June 2021, they've actually brought in an accelerated depreciation for any of your capital your capital acquisitions. So it means you're bringing forward all your tax deductions, and that can help fund the purchase of that capital spend. There's support for apprentices and trainees, and they'll pay up to 7,000 per quarter, representing 50% of the wage of your apprentice or trainee. One thing that has come out since the JobKeeper has come into place, that if you're eligible for the JobKeeper, you're not eligible for this support from 1 April onwards, but this support applies from 1 January. So, and even if you haven't applied, you've got until the end of the calendar year to apply for this. So something to keep in mind. The ATO assistance in terms of deferral of tax payments is an important measure. You can also reduce your current tax instalments down to nil and receive a credit. We're seeing the ATO be very forthcoming in terms of deferrals and providing that assistance. You do need to apply directly to the ATO for that, and that's something that your advisor should be able to assist with. There's some rent relief measures. Don't have time, unfortunately, to run through this in a large amount of detail, but for small businesses that are eligible for the JobKeeper, there is also some government enforced rent relief measures in place that do involve a reduction in the rent expense, and some of that's a full deferral or full relief of rent, and some of that is a deferral over 2 years. In terms of the WA state government measures, they've got payroll tax relief that's been brought forward. There's a one-off 17,500 for businesses with payroll between 1 million and 4 million. That should be being made available during July. And payroll tax has been waived for a 4-month period between the 1st of March and the 30th of June for taxable wages less than 7.5 million. Synergy is providing a credit for small to medium enterprise. Licence fees for a number of businesses have been waived for a period of 4 months, and that's just to assist with their cash flow. And there's some commercial tenancy as well as some land tax assistance in place for the owners of commercial property. Just to sort of finish up here, really high level in terms of disclaimer, but I suppose we've only been able to touch on some of those topics in a high level way. And look, I do stress the importance of getting advice. The rules are changing so quickly. It's hard even for people who read and deal with this every single day to stay on top of it. So I do encourage you to seek proper advice, document, and avoid any scenarios that could be considered a scam, because with this unprecedented support for businesses, we're also expecting to see unprecedented ATO activity to follow. So I encourage you to seek out an advisor, get some support, and I'm happy to speak and answer any questions that you have. I'll pass over to Tony.
I'm just going to unmute and get my video going, and I'll just share my screen. All right, thanks, Chris. Yeah, look, home stretch, just about there now. I'll just wrap up a couple of key things. So if you can see where we are, and just to finalise, we talked about, how do we maintain that commitment to navigate through these times, be agile. We talked about that financial control. We've talked about having a plan and some of those strategies around growth, profit, and cash flow. Chris has covered some of those tax initiatives. I think really important, to keep monitoring if you're not eligible up front, is to keep monitoring your eligibility, some of those concessions and subsidies, on a monthly basis, and certainly be agile around that. So the last thing I want to talk about is, execute, is how do we execute? And just before I get to there, just look, also very important, especially in the civil contract space, is, again, from an asset protection, particularly being mindful of, there's been some new announcements about a 6-month deferral in terms of any claims, I think up to $20,000 against a business, forcing a business into insolvency. Monitor your personal guarantees, make sure your PPS registrations are in place. Might be an opportunity to restructure your business in the current environment, and just be mindful of your directorships. So let's talk about execute, last piece. I think it's really important in our experiences, it's really important that businesses stop, take time out. Businesses, business owners and management and leadership have been under intense pressure. So it's how do you take time out, just to understand what's going on. And I think that's our experience, having worked with a number of businesses over the last 4 to 6 weeks, especially in this sort of challenging time. And I think, if you're going to execute, what's really important is to have good meeting rhythms, good meeting cycles. What do those meetings look like? Quarterly, monthly, weekly, and even daily. Even in our own business, we've instituted a daily meeting amongst the directors just to keep the communication, of us as stakeholders in the business, and to share our learnings or things that are happening in our business. And I think if you can get this meeting rhythm right, what happens is that you get this sort of alignment, this accountability, and you also get action happening in your business. So it's really important to sort of work on it. But one thing that we've found that is working really well, and is this, we call it a quarterly business review process. It's having that sort of robust process. Look, and in the current environment, we've sort of pivoted that to monthly review, just with a number of the businesses that we work with, because we just think even quarterly is too long at the moment. But it's having that process at a senior management level to scan for what are the opportunities and what are the red flags. Really important that as the management group, the key management group, are constantly looking for where are those opportunities and red flags, and have that forum or that opportunity. And our experience is not only to focus on the red flags and opportunities, but to keep updating those forecasts, keep updating those actions, that the business needs to keep focusing on. So, I really encourage you to look at a process in your business to make sure that you engage your key management team. So look at where the business is at, look at the forecast, look at what the focus areas are. Are there red flags that we need to take action on? The second most important thing, and we touched a little bit on this when we covered the people and process, but just make sure you've got the right people in the right seats doing the right things at the moment. Just really important. I think, one thing that, I see as a reflection that a number of senior management or key owners in the business is that, maybe the right people aren't sitting in the right seats. Do you have that agile leadership team? Do you have that dynamic team that are going to take action and act on things? Do you have the right people in the right seats? So I really encourage you to do that. So, if you're going to execute, have that meeting rhythm, have the right people in the right seats. And the third thing is make sure you have your KPI report in place. Are you monitoring your key KPIs in your business, be it them daily, weekly or monthly in your business? For example, and as I just said earlier in our own business, we're monitoring cash flow. I guess in that civil construction space is, are you monitoring the productivity of your team on a weekly basis? I would have thought at a minimum, the utilization of your plant and equipment, maybe your plant hire. What's the level of plant hire that you are incurring in your business? So I think it's just important to keep tabs on those measures. So let's summarize. Home stretch. what do we cover today? The theme has been, how do we navigate this new environment? How do we stay agile? As we said, engage, be committed, protect your energy, put that oxygen mask on yourself. I think, it's been a really challenging period the last, 4 to 8 weeks for many business owners, management teams. I think now is a really good time just to reset and, set yourself for the next couple of months to navigate your business through this time. Are you building a stable platform for your business? We talked about accurate, relevant, and timely financial statements, forecasting, understanding the different scenarios in your business. So build that stable platform for your business. Be dynamic. Where are the opportunities to, increase sales, reduce expenses? How can we add value? Focus on your value chain. Where are the opportunities around our marketing and sales, around our production and delivery, and around our finance and administration? We talked about being agile around cash flow, actively managing working capital. Get involved in debtor collection if you need to. Look at your CapEx in your business. Can you divest surplus equipment? Is your equipment being utilised? Look at securing your debt and equity funding sources. Whether that's from the ATO, whether it's from your bank, whether it's from other third-party sources. Look at the opportunities to create liquidity, but don't confuse that ability to access liquidity and improve your cash flow with your underlying trading results. You still need to make a profit, even in these times, possibly for a short period of time, as you navigate and restructure your business. Then, I guess these government concessions that Chris talked about can help businesses navigate through that. But it's something I think it's really important for businesses not to necessarily become dependent on it, because they're going to go disappear in the next 3 to 6 months, a number of those concessions, and then you're on your own again. And it's really important that we build a sustainable, resilient business that is agile, which we talked about. And lastly, which we talked about, is just make sure you're set up to execute. Make sure you have that meeting rhythm, your quarterly, monthly meetings, your weekly, your daily meetings happening in your business. Make sure that you've got the right people in the right seats, and make sure that you're getting the KPIs, the dashboards, the scorecards to run your business so that you're on top of your business, be it cash flow, be it productivity of your people or your plant, or whatever are those key measures in your business. One of my favorite quotes, I think, very relevant today. It's all about how adaptable you are. Are you resilient? Do you take action? How are you adapting to the current environment? So look, we might just open it for the moment for participants, and appreciate it's a little after 5 now. If anyone's got any questions, and Chris is going to monitor that if there's any questions, but appreciate it.
Look, there's currently no questions in there, but if you do use the function to type in a question, if you have one, we'll do our best to answer them.
If we blitzed you, then hopefully informed you, then that's also good. All right, Chris, we might keep going just in the interest of wrapping it up, unless there's any questions.
Yeah, no questions have come through, Tony. So.
Okay, all right. Look, just wanted to thank everyone for their participation. I think, the most important thing, and we appreciate your time and very respectful of your time. But look, I think what's important is, what's that next domino? You leave this webinar, there's a number of actions you need to take, but what's that first action? What's that first domino you're going to push in your business to, build a more agile business? So really encourage you to, act on it and take those actions. We do encourage your feedback. We want to get better. This is a pivot for us in terms of our own business. A different way to get out to an audience, obviously, in the current environment where we can't get in front of, presentations and do the presentations that we would normally do. So, you know, our pivot is to start doing webinars. So we really do thank you for your time. There will be a survey come out. We will send you a link to this webinar. If you feel that, you know, employees in your own business or any of your colleagues would benefit from this webinar, please pass on that link. We really want to just share our learnings, our experience with you. And there will be also access to the slides from today. So, and we've got our contact details there. If you do have any questions, more than happy to, Chris and myself, more than happy to assist or point you in the right direction. So yeah, look, just like to thank you very much for your time today. And I think on that note, we'll wrap up.